All right, everybody, welcome to the Bitcoin is Freedom show. The Bitcoin Freedom show is a podcast where I share the message of my mentors like Jim Rohn about capitalism, and I interview the most influential people in the Bitcoin space. Bitcoin is freedom, Bitcoin is hope, and Bitcoin is fixing the world. So please make sure to drop a like, subscribe, and turn your post notification on. So now, ladies and gentlemen, today's guest, the one and only, a proud Canadian with 30 plus years of experience in the trading space, especially in the risk, credit, and bond space. Correct me if I'm wrong. And just like me, you will see our guest today. He likes to hold his word and his opinion. He does not like to swear, and he's not calling out people that deserve it on podcasts and on tweets. So as a Canadian and a math lover, it is my honor to bring to you for the first Bitcoin is Freedom show, a Canadian Bitcoin legend, the one and only Greg Foss.
Thanks for having me. Wow, what a nice introduction.
So, Greg, I first want to thank you for doing what you're doing in the space because I think there's a lot of young people that are doing it. There's less people that are from your age and that have a lot of experience doing it. And I want to thank you for that because I've been able, because of people like you, to orange pill people like my mom and my dad, which I'm proud, and I thank you greatly for that.
Wow, thank you.
All right, so Ken, for the people that don't know you, I would like to know your Bitcoin story, Greg.
Sure.
How you got involved in Bitcoin, and maybe a little bit of your background too.
Yeah, no, because it's you know, tightly meshed. Let's put it that way. So first of all, so thanks for having me. My background. Let's start with the fact that I grew up in Montreal. Okay, I'm from Montreal, a proud Montrealer. When I was 20, what was it? I guess in 1982, I was 19 years old. I had a transformational experience in my life. I knew I wanted to be to go to McGill. I was studying engineering, but I realized, you know, I didn't really like engineering. It's crazy, right? You go, you invest your future, you think in studying something that you want to do for the rest of your life. And after about 2 weeks, I knew I didn't want to be an engineer at McGill. Okay. But I didn't feel that I should switch from engineering to business right away. I was okay at math. I was at McGill. I actually played sports at McGill. So I was mostly there for the sports. And I said, you know what, I'll always be able to switch from engineering to business, but you can't really switch back from business to engineering because the credits don't match up on the business side. So, you know, it's crazy. After 4 years of doing some pretty intense mathematics as engineers tend to do, I graduated in 1986, but I realized again, you know, I don't really want to become a full-time engineer. And I had one chance to apply to a business school in the US. Firstly, because I didn't have very much money and it cost about $250 US to apply to each business school. And then secondly, it matched up well with what I could bring to the table. Since I didn't have any work experience, it's difficult to get into a top-ranked business school with no work experience. But Cornell was trying to build an international business school, meaning attracting students from around the world. Mm-hmm. And luckily enough, they overlooked the fact that I didn't have any pure work experience apart from summer jobs. And they said, okay, well, we'll accept you because your GMAT, that was the admissions test, was very solid, and your marks in engineering were pretty good. So I like to tell people I was lucky to be a Canadian going to Cornell because I would not have been accepted. I'm pretty certain if I was an American going to Cornell, applying to Cornell rather, primarily because of the job experience. Anyway, 1986, I went down to Cornell University, which is in upstate New York, Ithaca, beautiful part of the world, about a 5-hour drive from Montreal. And I was really blessed to live with 6 undergraduate students off campus, but I got to know these guys. I got to know the American culture, and that, you know, you think that Canada and America are very similar, but they're not. There's some subtle and very distinct messages, or cultural differences rather. So anyway, the important thing was I got to live with these guys. I experienced the culture. I'm going to a good school. And after 2 years, you know, I did have the chance to stay in the USA and work on Wall Street. I knew I was switching into the business, the MBA. I was focused on finance. I wanted to become a trader. And I could have worked on Wall Street, but I said, I'm going to come back to Canada. I want to see if I can make a difference in Canada. I had lots of my buddies were still living in Montreal. So I came back to Montreal and I worked for the head office of the Royal Bank of Canada, Place Ville Marie. If you guys, I'm sure you guys know where that is. And I was working directly for the CFO, a great guy, Emile Bauduc. Okay. And Emile was a lifelong Royal banker, smart guy. And I was working in a special projects group for Emile. And one of the projects that I was assigned was to evaluate evaluate an option that was given to us with respect to our Mexican debt exposure. Now, Royal Bank of Canada had lent about $1 billion Canadian. Doesn't sound like a lot of money, but at the time in 1988, that was a lot of money. We had lent $1 billion to Mexico, and Mexico, along with a lot of other what's called LDC or lesser developed countries, had defaulted on this debt. Okay. So the biggest ones that had defaulted were Mexico, Brazil, Argentina, but there were plenty of smaller countries, Philippines, Vietnam, to the extent that the Royal Bank of Canada, which was not unique. In fact, all global banks were in the same situation, had exposure to these loans to lesser developed countries that were non-performing. They were not paying their interest. And in the trading market of these loans, the price of the loans had fallen from 100 cents on the dollar down to about 25 cents on the dollar. Okay. It's a valuation metric to account for the fact that they defaulted. What do you think the recovery rate will be on these loans? And the loans were generally trading around 25 cents on the dollar. In the case of Mexico, therefore, Royal Bank of Canada would have had to write down the value of their Mexican debt from $1 billion down to 250 million, right? Because you have to write $1 billion down to 250 million, a dollar down to 25 cents on the dollar. But the bigger picture was, if we took all of the banks, all of the exposure to these lesser developed countries, Royal Bank of Canada's exposure was about $4 billion in total. And if we had written down the $4 billion to the 25 cents on the dollar level, you would have to write off $3 billion, right? It's just, and where do you write off a loan loss? In a bank, you have to go and write it off against your book value of equity. The book value of equity of a bank is basically its risk absorbing or loss absorbing capital that's used because loan losses are a fact of life. Real estate developers default, mortgage owners default, small businesses default, and countries default. And in this case, $4 billion of defaulted debt needed to be written down in theory. The problem was, and this is what blew my mind, Joe, is I go and I do the quick calculation back of the envelope and I say we need to write down $3 billion of equity. And the book value of equity in the Royal Bank of Canada was less than $3 billion. And I'm like, holy crap, what is this? The Royal Bank of Canada is insolvent, which is basically an accounting term that says they would have a negative book value of equity. Okay. I'm like, I just went through 4 years of engineering and 2 years of business school to come and work at Canada's largest financial institution, Canada's largest bank, and find out that the financial system is bankrupt? What is this? You don't learn about this in school. They don't tell you these are the risks. And I went to my CFO, and I love Emile, don't get me wrong, okay? And I said, Emile, we have a big problem. And he goes, I know. don't tell anybody. And I'm like, don't tell anybody. What the F? I'm like, how do people have confidence putting their deposits in the Royal Bank of Canada if it's actually defaulted, bankrupt? The answer is, as you know, is because everybody assumes the banks are too big to fail. They assume that the government of Canada will be there to bail them out. Now, this is no different than any other banking system in the world. And the reason that Treasury Secretary Nicholas Brady in 1988 introduced what was called the Brady Plan to solve the Mexican portion of the LDC crisis. And my job was to determine which option we would take of the Brady Plan to turn our exposure of loans into Brady bonds. And it was a great project. And I actually got pretty excited about, first of all, I definitely picked or advised the bank to go 100% into the most valuable option that, turned out over time as a function of changes of interest rates, changes of oil prices, et cetera. But the clear thing here was the Brady Plan changed the duration or the maturity of the loans from 5 years into 30-year obligations. Backed, the principal portion, the 25 cents that it was trading at, was backed by US Treasury zero coupon bonds, which over a period of 30 years, because there's what's called a zero coupon, they don't pay a coupon, they just accrete in value back to their parity or 100 cents on the dollar. The 25 cents on the dollar was backed by US Treasury. They didn't have to write down the value of the loans, Joe. It was brilliant. It was accounting gimmickry, but it was brilliant. It was a solution so that they didn't have to realize their loan losses. Didn't change the fact that they should have realized their loan losses and written things down. I looked at myself and I said, this fiat thing is a Ponzi. Fiat currency, printed money, the ability to print money out of thin air to defend things like our banking system is a Ponzi. So you could ask me in my Bitcoin journey, when did I start looking for a solution to the Bitcoin Ponzi? To the fiat Ponzi, the Bitcoin being the solution? It started in 1988. And I'm going to tell you at this point, and that was a slip of the tongue, when I first heard of Bitcoin as well, I said, Bitcoin's a Ponzi. But I'm going to stay back in 1988, and I'm going to tell you, I was worried. I'm like, how does this financial system work if it's subject to being insolvent on a regular basis? And sure enough, it was, because I traded credit in the great financial, I traded credit in 1988. I traded credit in 1998, which was an incident called long-term capital management, which was a large Wall Street hedge fund that basically defaulted and couldn't pay the insurance contracts that they had sold to Wall Street and had to be bailed out by the Fed. So 1988, 1998, then the real financial crisis, 2008. That was a scary one. All of these times successively, the banking system was insolvent. It was on the verge of collapse, and it needed to be bailed out by the central banks, essentially printing money. Now, think of this. I just graduated from Cornell. I had a whole bunch of US dollar student loans. I felt that the Canadian banking system and the global banking system was actually built on, somewhat wobbly pillars. What am I going to do? Go to the Montreal Gazette or La Presse and say, I'm absolutely exposing the fraudulent banking system. No one's going to believe me. And secondly, I'm not going to have a job for the rest of my life, right? So I had to sit back and just bite my tongue and live through these successive financial crises, each single time further debasing or taking value away from the printed fiat currency. Okay. In 2008, I was working at a hedge fund. We were successfully negotiating the great financial crisis, and we put on a trade that basically, you may remember it, certainly the Caisse de dépôt et placement du Québec was a big player in this thing called asset-backed commercial paper. And the Caisse de dépôt et placement du Québec had lent or invested 16 billion of their, at the time, my parents were still alive in Quebec, the pensioners of Quebec, they'd put 1/10 of their assets into this asset-backed commercial paper at 100 cents on the dollar. That paper, because it had a small portion of US subprime debt, maybe 3 cents on the dollar, meaning if they invested in it at 100 cents on the dollar, it maybe should have been worth 97 cents on the dollar if you wrote off all the subprime debt exposure. They started to panic, and the case stopped rolling their paper, and the case was the biggest participant in this market. And when the case stopped rolling their paper, the whole market stopped functioning, and the value of the asset-backed commercial paper went from 100 cents. Remember, it should have been maybe trading at 95 cents if you X out the subprime mortgage. Guess where it traded down to? 20 cents on the dollar. And the Caisse de dépôt lost about $10 billion of Quebecers' money because they're dumb. They didn't do the math. We were lucky. We didn't own it at 100 cents on the dollar, but when it traded at 20 cents on the dollar, we're like, this is stupid cheap, stupid. And we could actually hedge the default risk of any of the corporations that were left in the asset-backed commercial paper. And I don't want to get too granular. The point is, it turned out to be the best trade of my career until I found Bitcoin. We bought the paper at 20 cents on the dollar, and 5 years later, it was worth 100 cents on the dollar again. Okay. So I've spent my whole career trading credit, looking at credit markets for guidance. Credit is the most important component of the capital markets. As you know, and as your listeners know, credit ranks has a prior claim in the capital structure. So in the event of a default of a company, if the debt of the company does not get repaid 100 cents on the dollar, the subordinate equity claim gets zero. Okay. Yet everybody buys the equities on the Toronto Stock Exchange blindly. Oh, because it's got to be cheap because it used to trade at 25 bucks a share and now it trades at 10 bucks a share. Guess what? If you don't know where the debt of that company trades, you need to understand that you're not doing your proper, appropriate risk analysis because the debt has prior claim. Okay, I just got to respond to a quick text message here, but always look to the credit markets. They are the most important component, and they have signals that will tell you whether your equity should be worth. You should not, in other words, invest in equity without knowing where the credit trades. Okay, here's my advice to everybody. Credit is the most important and biggest component of capital markets. Always follow what the credit markets are doing. They tend to lead any crisis because the equity guys just don't understand and follow the credit markets closely enough. So here's the key thing. Okay, my life has been spent in credit. We completed the perfect trade at our hedge fund, and I just didn't think I wanted to be involved in financial markets anymore, managing money professionally. It's hard on your stomach. You're in the great financial crisis. You go to work, you're sick to your stomach, even though you're doing good, you think the world's going to end. And it did feel like it was going to end in 2008. Anyway, I put my hand up and I said, I need to get out of this business in 2016. I want to retire. I'd spent close to 30 years in the markets managing money professionally, and it takes a toll on your body and on your mind. And I said, okay, I'm going to retire. I'm going to go skiing. I'm going to do the good things in life, right? Then someone introduced me to Bitcoin, and I'm like, fuck Bitcoin. Bitcoin's a Ponzi. Like, don't even start with this. And they said, okay, listen to me, hear me through at least. And you know all the beautiful things about Bitcoin now, scarcity, 21 million backed by math and code. But the one thing that this guy showed me, and it was actually a guy called Fred Pye, another Canadian, Quebecer, Montrealer, who started the company 3IQ. 3IQ was one of the first Bitcoin, and it was in fact the first Bitcoin closed-end ETF to be launched on the Toronto Stock Exchange. And I love that idea. I wanted, once he convinced me about Bitcoin, and the reason he was able to convince me, he showed me one thing, Joe, and I want you to stress this with your viewers. Mm-hmm. If you are skeptical about Bitcoin, but you want to see a beautiful, living, breathing system working, go to tradeblock.com and watch the blockchain in action. And all he had to do was show me this thing. And as an engineer, I'm like, you see all the hashes flashing across that are going to go into the mempool, that are going to go into the next block that's formed. And as a visual for an engineer, I'm like, what? Oh my God, this is beautiful. Like right then, I'm like, I love this technology. And you tell me I can transfer this anywhere in the world. It can settle in 10 minutes with no intermediary. I don't have to worry about these idiot banks. This is beautiful. Oh my God, this is beautiful. Anyway, I went down the rabbit hole in 2016 and I went hard. Why? I'm just going to tell you again, because I had been essentially looking for the solution to the fiat Ponzi for close to 30 years. And Bitcoin is it. And it's now I'm going to jump to my conclusion and we can jump. Bitcoin is the best trade and investment opportunity I've ever seen in my life. Okay. Which means the upside is so extreme versus the downside. It's way better than even asset-backed commercial paper at 20 cents on the dollar. Now, the Caisse de dépôt et placement du Québec are idiots. Okay. Don't follow them. They're going to get into Bitcoin when it's way, way, way too late. Meaning it'll be at $2 million a Bitcoin by the time that the case gets involved. And I hope that some of the listeners understand. It's not that I don't like the case. I just don't like the way they manage risk. Why buy something at 100 cents on the dollar and blow it out the doors at 20 cents on the dollar, like they did with asset-backed commercial paper, without doing the mathematics, without understanding the risk return and how you could hedge? They made a mistake lending at 100 cents on the dollar, but they also made a mistake selling that loan or that asset-backed commercial paper at 20 cents on the dollar. There's got to be a price for your risk. And this is what I want to stress to your viewers that I've practiced for over 30 years in my life. Okay. And right now, Bitcoin, I can say without a doubt, is the most exciting, best asymmetric trade opportunity I've ever seen in 35 years. So we can talk about that, but that's my history and it's a long one. And it should be understood that I didn't just fall off the turnip truck, okay? And just say, oh, I'm just fresh out of school and I'm going to tell you why you need to own Bitcoin. Fuck you, okay? If you're 25 years old, you really don't know much about how the world really works. And I'm not saying that the kids out there, they get it, but they have never sat in a risk chair. And then the flip side is these professors at a school who have never sat in a risk chair, but have these books on theory about how things should work. Let me tell you, markets do not work like they are described in a textbook when the world is unraveling. And this is why you need Bitcoin. So I'm going to stop talking. You can ask me some questions, but that was my Bitcoin journey. I have been studying Bitcoin since 2016, and it amazes me. Every single day, I learn something new about how to appreciate Bitcoin and how to value it as the best investment opportunity I've ever seen.
Oh, that's great. Awesome. I had a similar story with Bitcoin. When I discovered it, it took me way longer because when I discovered it in 2017, I said, there is no way in the world the banking system, the banker that have built their system for hundreds of years are just going to let it go for this thing called Bitcoin. And I put my money in BitConnect, which was a Ponzi scheme, and I lost everything.
Oh, darn.
And but it was only $4,000. I was
doesn't matter. $4,000 when you're young is a lot of money.
Yeah, it was the only investment money I had, but that's fine. I learned. And in 2020, when I started to see video and I had more money at that time, I just bought a house and now I was starting, okay, I got a house, I got what I need. Now, what should I do? Where should I invest my money? I started to see video about Michael Saylor.
Oh yeah.
And that was done. That was
well,
done.
is that cool? Because he's an engineer as well, right? And so Saylor is beautiful because one of the things that I value as an engineer is the first law of thermodynamics, which is the law of conservation of energy. And that's basically what Bitcoin is. Bitcoin is digital energy. And we could get into that, but yes, Saylor's brilliant. I've been on some Twitter Spaces conversations with him. I've met him at conferences. He's a walking computer mainframe, but he can talk. I've gone to school with rocket scientists like him at McGill, but most of them can't even talk, right? They're just gibberish because they're going in their head. Saylor is able to do the math in his head, and then he's able to talk and eloquently explain his rationale.
He's something else. He's a
beast. Yes, sir. I agree.
All right. So do you think that everybody should own Bitcoin? And if so, why?
So great question. So yes, everybody, I have a statement that if you own 0 Bitcoin, you're actually taking more risk than if you have a proper portfolio allocation. So let's think about that for a sec. I'm not saying to be 100% invested in Bitcoin. I'm not 100% invested in Bitcoin. There are some people who are 100% invested in Bitcoin, but by and large, my advice is for people to get exposure to Bitcoin at a level that's greater than 5% of their investable assets, including real estate, but less than, and I'll throw out a number, 15%. It's not because I don't want people who believe in it so much that they can go higher than 15%, but Bitcoin requires education. It requires conviction. It requires you being able to not look at the price of Bitcoin on a daily basis and worry about what it's doing. We need to think about Bitcoin where it's going from today, 20 years from now. And the price action might be choppy, but I'm very confident it's from the bottom left to the top right in terms of the chart in its trajectory. So if you own 10% of Bitcoin, just as a mid level, 10% Bitcoin, you still have 90% of your assets in other things that many people forget to look at. All they're doing now is, oh my God, I own 10% Bitcoin. Oh my God. You gotta learn not to look at that 10%. And we're going to evaluate that in 10 years. Why? Or 20 years. I believe Bitcoin today should be trading over $1 million US per Bitcoin. And it's not. It's trading somewhere around 50,000. And some days it's trading at 45, and some days it's trading at 65. But you got to understand, those are rounding error prices in the context of where I think it ultimately goes to and where it should be trading today. So what you got to do is you got to get your 10% allocation, which means you can invest money on a weekly basis or a monthly basis to get you up to that allocation, and then put it away, and we'll talk in 20 years. Because what is Bitcoin? It's insurance on the other 90% of your portfolio. So if you have 0 insurance, you're actually taking excessive risk in the rest of your portfolio because you don't have insurance. Bitcoin is beautiful insurance against the collapse of the fiat system. And you'll say, oh, the US fiat is never going to collapse. And I would say, you're sort of right. It's not likely to collapse soon, but many other fiat currencies collapse on a regular basis. In my lifetime, Argentina has defaulted 3 times. Holy crap. And Argentina is a G20 country. Now, Canada is going to default before the USA defaults. Hate to say it, but it is true. Canada is a G7 nation. The credit default swap market in Canada is charging a much higher insurance premium than it is on USA debt. So the market is telling you Canada is more risky. And we have a prime minister that says things like, the budget will balance itself. I beg your pardon? The budget will balance itself. If he was the CEO of a publicly traded company, he'd be fired, out, gone. You don't say stuff like that. But then he follows it up with stuff like, forgive me if I don't care about monetary policy. What? You don't care about monetary policy? Are you really that silly? If you are that silly, you should stick to being a drama teacher, because you shouldn't be running an economy the size of Canada. And this is the problem. Plenty of politicians have no clue how financial markets really work. And every single global country is in a semblance of the same debt spiral. I'll just describe it as that. We keep issuing debt. We never will be able to pay it back. It's mathematically impossible to pay it back, which means we'll just have to keep printing more money to solve the debt spiral. What does that mean? You need to own assets that maintain their value against the certainty of fiat currency being debased or printed and printed and printed to solve the Trudeau, the budget will balance itself. I guess it balances itself because you're going to print more money, Mr. Trudeau. That is selfish on behalf of boomers like me, that is pulling forward the returns, the future returns at the expense of my children, at the expense of younger kids like yourself. I'm embarrassed as a boomer. I'm sincerely embarrassed. I'm selfish, I'm soft, and it's not what our country was made of. Printing yourself to prosperity is mathematically impossible. Your guys are all saying, I'm making so much money on my real estate. You're not making anything on your real estate, guys. Your house is still a house. It just takes more dollars to buy the same house that it took, the same house that was there 30 years ago. It takes more dollars to buy the same house. Why? Because the value of your dollar has depreciated each time the government prints more money. Simple mathematics, grade 11 math. Yet no one is doing that math. Joe, everybody needs to own Bitcoin because Bitcoin is the perfect hard asset. It's better than gold. It's better than real estate. Both of those are better than fiat money. But listen, you need the best. You need to know. You go to the horse track, which is the best horse in the race? It's Bitcoin. You got to own a bit of Bitcoin. Please. For you and for your children.
Love it. Love it. I agree. And I'm a little bit more than 15%, but...
So am I, sir. So am I, okay? And that's fine. And I have 3 kids, and I've worked hard in my life to get a level of financial stability that can allow me to get higher than 15%.
Here you go.
Okay?
Get started.
And I don't look at it.
Yeah.
I think of it as insurance. And think of it as insurance, like if you own a house and you own fire insurance on your house. Why? Because you don't want your house to burn down, but heck, sometimes it happens. So you better own that insurance. And you don't trade that insurance. And you don't say, I don't need that insurance. That's stupid. You live in a fire zone. And the government of Canada is making that fire zone worse and worse every single day. And the government of Canada isn't alone. All the ECB or European countries are the same. And the Fed is the same in the United States. It's a race to the bottom in terms of fiat currencies. As Voltaire said in 1600s, he goes, all fiats eventually return to the intrinsic value of the paper they are printed on. Meaning, fiats return to an intrinsic value of 0.
Yeah.
Okay. Pretty simple. You better get some insurance against that happening. All fiats will fail. Canada is going to fail. We're at risk of failing, and Justin Trudeau has no idea. He's blind to it. He doesn't understand the signals that the financial markets are sending to him.
Wow. Yes. I completely agree. All right. And for everybody that doesn't know, Greg as a PDF, why every fixed income investor need to consider Bitcoin as a portfolio insurance. So I'll put that in
beautiful. Yeah,
the
that's
bio.
a paper that I wrote. It's based on credit markets. It's based on the fact that bond markets are actually very risky right now. Bond markets offer the worst return for the risk that I've ever seen in my 30 years of trading credit. Yet everybody still has exposure to bonds because bonds are their safety net. Well, you're putting your safety net into something that is a fiat contract that is programmed to debase. Okay. That's all a bond is a fiat contract. So I take issue with bonds. If you own bonds and own 0 Bitcoin, you're going to get hit on 2 sides. Okay. Bonds are a horrible investment. And if you don't own any Bitcoin, what is essentially insurance against this horrible investment, you're going to get hit on both sides. So thanks for pointing that out. It's a paper that I wrote based on my experience trading in the credit markets and why I think and how I can measure the intrinsic value of Bitcoin today based on credit markets, but also how I come to my price target of Bitcoin of over $2 million per Bitcoin US dollars in today's dollars. Okay. And then you do some risk analysis and you say, I'm not 100% certain. The only thing I'm 100% certain of is fiat money is going to go down. That's math. There's no guarantee that Bitcoin's going to go up, although I'm confident, but not 100% certain that I'm right.
All right. So maybe you want to explain a little bit more where you got to that $2 million. I know the answer, but I think that's a good math.
All right, buddy. So it's quite easy. In 2018, based on numbers that I got from the Institute of International Finance, total global financial assets being defined as real estate, bonds, public company debt, public company equity, private company valuations, gold, commodities, currencies, all financial assets in the world measured in US dollars was worth about 900 trillion US dollars. Wow, that's a friggin' huge number, isn't it? 900 trillion US dollars. Okay, those are numbers from the Institute of International Finance, of which bonds are close to 400, or debt rather, total debt is close to 400 trillion of that 900 trillion. Holy crap. That's a big leverage in the system, but that's the reality of the world. And incidentally, the value of that debt is 4 times the size of the global economy. So the global economy is about $100 trillion, and the total global debt is 4 times that. That's another reason that we're in this debt spiral, and you'll never be able to escape the acceleration of the debt balloon only because of the interest that is required on that debt. But I don't want to go on to that aside. So $900 trillion, I think there's a good chance that Bitcoin will capture 5% of that total addressable market. Okay. So what's 5% of 900 trillion? $45 trillion, right? Not difficult math. 5% of 900 trillion is 45 trillion. How many Bitcoin are ever going to be mined?
21 million.
There you go. What is 45 trillion divided by 21 million?
2.1.
There you go, brother. There you go. 2 million in today's dollars, because this is numbers based on 2018. Okay. Now you'll say, Foss, why are you comfortable saying that Bitcoin will get 5% of this? Well, firstly, I believe it's the most beautiful store of value and hard asset ever created. It's better than gold. Gold is 10 trillion. And right now, Bitcoin is 1 trillion. So Bitcoin is going to go up 10 times just to get to the value of gold. Then it's going to keep going because it's going to chew into the bond market. Okay. The $400 trillion or the debt market. Holy crap. 5% is such a, but 5% is still a $2 million US Bitcoin in today's dollars. Pretty simple. Then do some math on it. Let's reverse engineer the chance that the market is telling me Bitcoin is worth $2 million. And how you do that is you do a binary distribution where X% times 0, which is the outcome where Bitcoin's worth 0, times the probability that the market says Bitcoin is going to be worth 2 million, according to today's trading price. And to use $50,000, just to make the math easy, $50,000 implies the market is only saying there's a 2.5% chance that Bitcoin is worth my $2 million target, right? 2.5% of $2 million is 50,000. That's where Bitcoin is trading. And the other 97.5% is that it's worth zero. I'll tell you, I'm not 100% certain, but it's way higher than 2.5%. It's way higher than the odds the market's giving me. So what do you do, buddy? What do? You
buy.
You close some, you buy some, we'll talk in 20 years, okay? It's really quite simple, yet people overthink stuff. Oh, the government's going to ban it. Oh, China's going to do this. Oh, well, look, just sit back and understand that over time, Bitcoin, if you look at it in a logarithmic scale, is a beautiful ascending line from bottom left to top right. And does it go through 2 million bucks? I think it does, but it's got to get there first. So that's my target. It's not my limit, but it's my target. Okay. And that's why everybody needs to own a little, because if it does get to my target, you're going to look at your neighbor who does own some Bitcoin, and he's going to be buying your house because you need to sell your house. And he'll be like, okay, I'll just buy it with some Bitcoin. You see, it's called insurance.
I love it. And for the people that are not having a lot of money right now, they maybe want to invest in Dogecoin, Shiba Inu.
Please don't. Please, okay? The shitcoins are going to cost you money. Bitcoin is the first and only blockchain that is truly decentralized, okay? It is the most powerful computer network in the world, and it's scarce, 21 million. It's transferable. It's divisible. You know, you don't have to buy one Bitcoin. You can buy $10 of Bitcoin each week for the next 50 weeks, and at least you'll have $500 worth of Bitcoin. Okay? And that's the exciting thing. This is the most beautiful technology I've ever seen for creating and storing your energy. Like Michael Saylor would say, as an engineer, you're storing the value of your time and energy today so that you can consume it in the future. And it doesn't get stolen from you by more printing of money. And here's a pretty cool thing. In 1982, I worked installing asphalt shingles on the roofs of houses in the West Island, okay? And I'll tell you, I made about 40 bucks a day, 8 hours a day, working for $5 an hour in the hot sun. And man, it was tough work, okay? Mm-hmm. And you're sweating and you're dirty and your fingernails hurt and you're in the sun. And I made 40 bucks. Now, if I kept that $40 that improved the value of the house probably by $200 on any given day, the $40 that I earned by improving the value of the house by $200, if I kept it in cash, what is that worth to me today? If I turn around and try and use that $40, what can I get? A couple of beers and a hamburger, okay, for 40 bucks. I spent a whole day working 35 years ago to get a couple of beers and a hamburger now? What a horrible trade. Except the rule of conservation of energy, where my energy and time that I put into that house, if I had stored it in something like Bitcoin, you can hope and trust, because of math and code, that your store of value will go up over time. That's simple. As an engineer, I love it. As conservation of energy, I love it. As somebody who's trying to ensure the future of my children, I love it.
Nice. So, Greg, I want to be respectful of your time.
Sure.
How much time you got left?
Okay, why don't you pick? I mean, I'm here for you. I don't want to cut you off, but you know, if we can wrap up in 25 minutes, let's say 25 minutes, or however long you want to go for.
That's perfect. Sure. Awesome. Thanks a lot.
Sure.
So you're a bond expert. So I want to have your opinion. I think everybody want to have your opinion on the Volcano Bond.
Okay, great question. This is an interesting exercise in pricing risk in any market, okay? The reality is El Salvador is undergoing an experimental transformation that I believe is going to be successful. I believe is smart, but it's not guaranteed. And when something is not guaranteed, there's uncertainty and therefore risk, and you need to be compensated for that risk. They want to raise $1 billion. In today's money, $1 billion, it's a rounding error, okay? It used to be big money. Now it's a rounding error because the governments are printing so much money. But they want to raise $1 billion, and they want to do it in an instrument that has the opportunity to participate in Bitcoin upside, as well as paying a coupon of 6.5% that is substantially lower than what their current non-Bitcoin bonds are trading at. Like that's not surprising because the Bitcoin component provides optionality or value that gets subtracted away from the yield component in total. So their bonds are currently, just for a number, let's say they're trading at 12% or 13.
I think
so. The 13% gets taken down to 6.5% or half of the total yield on the other bonds. Because why? Because there's optionality on the price of Bitcoin, and an option has value. And when an option has value, you take that out of your total charge. Okay. So why does it go down to 6.5%? Because the market is telling you, if this issue clears, that 6.5% is the right number for the value of the option on Bitcoin going forward. And the bigger picture is this: if they can successfully ring fence the risk that this bond is exposed to, and it's not exposed to the entire country, but only exposed to a city, you could make lots of arguments that this is a pretty exciting financial instrument. I'm not following it closely enough. I'll just tell you that 1 billion is a very small amount in the context of $1 trillion Bitcoin valuation. Are there big whales out there that will turn around and trade some of their Bitcoin to get exposure to a bond that still has the Bitcoin optionality? They want to see El Salvador succeed, because if El Salvador succeeds, it increases the value of the entire Bitcoin ecosystem. I think it's a pretty neat experiment. Is it guaranteed to perform? No. Is it guaranteed to succeed? I haven't seen the progress, but I do know that this is pushing against a lot of the old underwriting rules in Wall Street and how new issues are brought to market. And it's twisting a lot of people out of shape, including the IMF, by the way, which is, like they're another organization that I have huge problems with in terms of, their continuous holding hostage of countries like El Salvador. But notwithstanding all these things, I think that this Bitcoin bond exercise with the volcano, optionality and all that stuff in Bitcoin City is pretty exciting. And here's the neat thing that I love. El Salvador is creating a Bitcoin community. I know at least 10 people that are moving to El Salvador. Oh, yeah. And these people have money. These are not poor people that are moving there. This is good for their economy. Don't you understand how an economy works, you fucking idiots? Like IMF, go pound sand, okay? You're going to say, oh, we're not going to do. If you get enough rich people in the world moving to El Salvador, they solve their own problem.
Yep.
Okay, their GDP increases just because of that. Okay, let's put all of this aside and say, am I excited about this? Yes. Is it a risk that it doesn't succeed? Of course, like everything else. But I think if it's done properly and if the pre-marketing was done and everything like that, I think it should be a great result for the country of El Salvador and the investors as well. There's going to be a lot of people that don't have the ability to buy Bitcoin, but that do have the ability to buy a Bitcoin bond that'll say, hey, I should take some of that. Anyway, lots of, win-win scenarios for sure.
Got you. I love that. All right. So maybe let's bring a little bit of heat, only if you want to.
Okay, sir.
Let's talk about people like Peter Schiff, Steve Hanke, Warren Buffett, and Charlie Munger. Why they don't get it?
Let's start with Peter Schiff. I've debated Peter on Peter Schiff on a Peter McCormick podcast. I've debated with him on Twitter.
I saw a meme of that. That was insane. At the start, I don't know if you saw the meme.
Yeah, I saw it where I said, oh, I want this to be a friendly debate. And then 10 minutes later. Yeah. So, these guys, Bitcoin Twitter's hilarious. They 30 minutes later, and I call him out. I say, you're a horrible risk manager, because he is
so true.
He is a horrible risk manager. He understood the value add of Bitcoin. He understood that it could overtake his gold preference. And yet he did nothing to take insurance essentially out. Imagine if he had bought Bitcoin when it was at $10 a Bitcoin, and it's now up 1,000 times or 50,000 times. It's got not 50,000 times, 5,000 times. Okay. If he had only had 1% there in his gold portfolio, but it was up 5,000 times, that's 500. That's a 500% return on his total portfolio. His total portfolio would have been up 5 times. Even though the other 99% has basically done nothing because it's been poorly managed in his gold. So Peter Schiff is a bad risk manager, okay? But he understands it. He's just too stubborn and too stupid, and now continues to, call the kettle black and everything like that. He's a bad risk manager. And on that debate, he admitted it. He goes, I don't care.
Yeah.
What the fuck? I don't care? You're managing money for other people? I'll tell you what, if I ever told my clients I didn't care about their risk profile, they'd fire me on the spot. Okay.
Yeah.
Charlie Munger and Warren Buffett, pure and simple, are conflicted because they own so many bank stocks that they know Bitcoin's going to disintermediate their bank stocks. Charlie Munger called Bitcoin rat poison. And then Warren Buffett said, well, it's now rat poison squared. Guess what, you conflicted old fucks, okay? You're wrong. And it's very simple to see why you are talking that. If Bitcoin is rat poison, it's because fiat is the rat, okay? Very simply, you're a fiat guy and fiat is the rat. And yes, Bitcoin is the poison. Now, is Warren Buffett a good investor? He's been in the market a long time. Time in the market is more important than timing the market. He probably understands Bitcoin. He probably knows that he needs some. He's just talking his book that he built up over 90 years? Because that's how old he is. Don't get technology advice from 90-year-olds. That's the wrong thing to do, especially when they're conflicted because they hold things like Coca-Cola and American Express. Okay, American Express is toast, okay? In a Bitcoin payment rail, American Express better do some work on how they charge merchant fees and all the like, okay? Here's a story. I'm a partner in 8 Irish pubs in Montreal, right? I think I've told you about that.
Yes.
Visa and MasterCard charge my pubs about 2.5% merchant fees every time somebody comes to the pub and pays their bill with a credit card. We have to pay 2.5% of the bill to the merchant, to the credit card company. Now, Irish pubs, we're pretty good operators, but Irish pubs and restaurants in general are tough businesses. And our total profit margin, ours is about 14%. Well, if it means that when someone comes out and takes a credit card payment to pay us, our profit margin goes from 14% down to 11.5%. Wow, that's painful. Yeah. Guess what credit card fees are in the third world? In El Salvador.
10%.
Attaboy, 8%. Holy shit. Okay. If people pay in Bitcoin, it's 1/10 of 1%.
That's robbery, 8-10%.
Okay, it is, but that's why Visa and MasterCard and American Express have made money.
Yeah.
And then we don't even have to talk about Western Union. And then who was the third guy? Oh, Steve Hanke, pure and simple. The guy's an armchair economist. He's horrible. He's IMF conflicted. He's never managed risk in his life. He actually celebrates the downfall of countries like Lebanon and Turkey. He's a disgrace. And he goes to Johns Hopkins. And if I was a graduate of Johns Hopkins degrees, he doesn't go to Johns Hopkins, but he's a professor there. If I held a diploma from Johns Hopkins, I'd be insulted by his utter drivel.
Yeah, this guy is something else. I want to say that, I'm pretty sure you have said it in other interview. I have a lot of respect for Peter Schiff and all these other guys, but after their opinion, you might have a little bit less respect because they don't have respect for their client and all that.
Yes.
But
yes.
I just wanted to point out that it's all respectful, and we just
well, sometimes it is, but you can't outright call for the demise of a country and ethically, and that's what Steve Hanke is doing.
No, the last one, I don't respect that guy, really. I don't really.
No, it's actually disgraceful. I'm wondering whether he's all there, right? Like in his head, does he understand the evilness that he's spewing? Because it's pure evil.
Yeah.
He wants other people to suffer at the expense of his hegemony, the US dollar. Okay. I'm sorry, man. That doesn't cut the mustard. That doesn't cut muster. It's I'm butchering the words, but here's the thing. Look, you're always supposed to listen to other opinions that are contrary to your own investment opinion. So I listen to them. I don't believe they are right, but you always got to listen to research that is contrary to your own opinion, because if you're wrong, you need to exit your position. And so far, I haven't met anybody that has truly studied Bitcoin that thinks Bitcoin is anything but, as you say, freedom and hope, opportunity, an ability to solve the fiat Ponzi that has been thrust upon us by hundreds of years of mismanagement of central bank policies and the like.
Love it. I think that's very good to wrap this up. Maybe what's your next plan for the next 2 years? What's your plan? What Greg Foss is going to do for the next 2 years?
Oh, I'm working in a really cool power company right now where we're going to make some pretty large announcements on mining Bitcoin using our own energy. Okay. We're not going to be a hostage to Hydro-Quebec and the rates that Hydro-Quebec charges Bitcoin miners and then causes those Bitcoin miners to leave Quebec because the fees are egregious. So it's a company called Validus Power. As you know, proof of work or energy is the most important component of securing the Bitcoin network. Everyone says Bitcoin is waste energy. We have lots of things where we actually consume energy waste, okay? We can be very, very valuable in balancing the grid, all these cool things from an engineering perspective, but it's Validus Power. I can't say too much. I'm not under any blackout periods or anything like that, but I will say it's one of the most exciting projects I've ever been involved in. And the neat thing is it combines my engineering background with my financial experience, right? So I actually took a turbo machinery course at McGill in my 4th year. It was an elective. And I'm like, why am I taking turbo machinery, which is basically rocket science? Okay. Why am I taking turbo machinery if I don't even want to be an engineer? Now I know. I took the course as an elective to prepare me for this part of my journey in my life. I got 3 kids. I'm looking forward to trying to help their future, not just of my kids, but of kids all around the world. Bitcoin is the solution to so many things. It is absolutely essential to help third world countries grow out of their consistent spiral. 4 billion people in the world don't have bank accounts, but many of them have an iPhone or not a cell phone, but a smartphone that they can transact and earn and save Bitcoin on. I'm a Bitcoin maximalist. I don't think I'm not saying don't own other NFTs or Ethereum. in the short term, but in the long term, I believe that all those other applications will go from being, so Bitcoin has 3 layers. We have the chain layer, the on-chain layer, layer 1, which only does 7 transactions per second. But then we have the Lightning Network, layer 2, which can do hundreds of thousands of transactions a second. And then the exciting one is layer 3, or another exciting layer, layer 3, which is the smart contract layer. I think a lot of these other apps that are being developed on other blockchains that are not decentralized and are not as secure as the Bitcoin blockchain, those apps will navigate or gravitate towards Bitcoin layer 3. It's a long journey, you guys. I don't want to talk about the next 20 days. I don't even want to talk about the next 20 months. Let's talk in 20 years. Is that fair? And I look forward to having a beer with you in Montreal. Trying to get you hooked up in the Montreal community to the best of my ability. The Montreal Bitcoin community is really solid. And I just really value what you're doing, man. I think that this helps the younger generation. I am extremely, once again, I'm extremely embarrassed by the performance of my generation. Us boomers, we're spoiled. We're soft, okay? My granddad was a World War I fighter pilot. He got awarded the Order of the British Empire called the OBE. It's a very distinguished award for bravery. He didn't fight those wars, and he was in both wars. He didn't fight for the Canada that we're turning into right now, okay? Justin Trudeau is not the leader that we need for the future of the children. And I can state my political beliefs. That's fine. I'm just telling you, we need responsible fiscal and financial management at all levels of business and government in Canada for us to succeed, for our children to have a good future. And it starts with Bitcoin, in my opinion.
Yes. Thank you, Greg.
Good.
You're too kind. And thanks a lot for everything you're doing for
never too kind, buddy. You're doing great work, and I'm happy to help contribute how I can. All right. So let me. Why don't we hook up again just privately? You know, so we'll sign off here. I actually should run. I need to respond to a call and everything. Yes. But then we'll hook up and maybe we'll have a beer, or we sure will have a beer. It just depends when in Montreal, and just talk about your future and everything like that. Okay.
Awesome. I love it. Thank you, Greg.
All right, buddy. Thank you for having me. Okay. Thank you.
You're a
Merci, Montréal.
Yes.
Away les Habs. I know it's difficult. It's difficult this year, but last year was so much fun, for no glorieux. So go Habs, go. Love you guys. Thanks again.
Yes, sir. Let's go,
See you,
let's go, les boys. Thank you.